Magandang araw sa ating mga kamatalino at kamatiga. So ngayon nga pong araw na ito ay samahan ninyo ako upang atin pong alamin ano nga po ba ang tinatawag nating stocks and bonds. So ito po ay sisimulan natin sa ating definition of terms. First, meron po tayong tinatawag na stocks, also known as a share or equity, represent ownership in a company. When an individual owns stocks in a company, they are considered shareholders. So stocks are traded on stock exchanges and their value can fluctuate based sa iba't ibang factors kagaya ng company performance, market conditions, and economic trends. Second is dividend. So pag sinabi naman nating dividend, it is the distribution of a portion of a company's profits to its shareholder. So it is usually paid out in the form of cash, but it can also be issued as additional share of stock. So hindi po lahat ng company ay nagbabayad ng dividends, and yung decision is to distribute them typically made sa company's board of directors. Also, meron po tayong tinatawag na dividend per share. It's a financial metric that indicates the amount of dividend a shareholder would receive for each share they own. So ito po ay kinakalculate by dividing the total dividends paid by the number of outstanding shares. Also, we have stock market. Refers to the collection of markets and exchanges where activities such as buying, selling, and issuing shares of the publicly held companies take place. So, it provides a platform sa ating mga investors to trade the financial instrument kagaya ng stocks and bonds. Next, we have market value, also known as market capitalization, and is the total value of companies' outstanding shares of stock. So, paano naman po natin to kinakalculate? Simply, by multiplying the current market price per share by the total number of outstanding shares. Okay? Next, we have stock yield ratio. So also known as dividend yield. So ito po ang financial ratio that represents the annual dividend income as a percentage of a stock's market price. So how to calculate this? By dividing the annual dividend per share by the stock's current market price, and then we will multiply by 100. Par value. It is the nominal or face value of a security as stated in its legal documentation. Okay? So, para po sa stocks, ito usually yung very small amount. And para naman sa bond, it represents the amount that will be paid back to the shareholder or bondholder at maturity. And bond. Bond is a debt security that represents a loan made by an investor to a borrower, typically a corporation or government. Okay? And in return for the loan, yung nanghihiram po nagbabayad ng periodic interest to the bondholder and returns the principal amount at maturity. Okay? So, depende po yon sa end of period. Next, we have what do we call the coupon. So it is the annual interest rate paid on the bond expressed as a percentage of the bond's face value. So ito po yung fixed amount ng income ng isang bondholder na natatanggap niya periodically. Okay? And the coupon rate. It's the annual interest rate that the bond pays. Okay? So, express percentage of the bond's face value. So, it is set at the time of issuance and remains fixed throughout the life of the bond. Okay? Or throughout the period. Also, the price of a bond. So, it is the present value of its future cash flows, including both periodic interest payments or the coupons and the return of principal at maturity. Okay? So again, the bond prices fluctuate based on changes in the interest rates and the perceived credit risk. Okay? And for the last important terms, we have what do we call the fair price of a bond. Okay? So it is the present value of its future cash flows calculated using an appropriate discount rate. So ito po ang nagre-represent ng current market value ng bond based on the prevailing interest rates and other relevant factors. So if the market price equals the fair price, the bond is considered to be trading at the par. Okay? Now, let's proceed. No? Let us understand what is stock. Okay? So when we say stocks, buying part ownership in a corporation. When individuals buy stocks, they are essentially acquiring a portion of ownership or equity in a corporation. So as shareholders, they have a claim on the company's assets and earnings. Additionally, they often have voting rights that allow them to participate in certain decisions affecting the company. Okay? So again, pag yung value ng stock, it can fluctuate based on the various factors, and investors may buy and sell them on stock exchanges to potentially benefit from this price movement. And generally speaking, the higher the potential return, the higher the risk. Okay? So, stocks can be bought or sold at its current price called the market value. So, kapag bumili daw po ah, ng share ang isang tao, dapat meron siyang certificate na kung saan merong corporation's name, owner's name, number of shares, and par value per share. Okay? Meron po tayong dalawang type ng stocks. Okay? So ano-ano po yun? Una, meron tayong tinatawag na common stock. Ito po yung nagre-represent ng type of ownership interest in a corporation. When individuals buy common stock, they become common shareholders and acquire a proportional share of ownership in the company. Common shareholders typically have voting rights allowing them to participate in certain corporation decision. Okay? So they may also receive dividends, though these are not guaranteed and depend on the company's profitability and the decision of its board of directors. Okay? While the deferred stock refers to a type of stock that comes with a delay in the time when it can be issued or granted to the recipient. So unlike common stock, which is typically granted immediately, deferred stock may have a vesting period or other conditions that must be met before the recipient gains full ownership or control over the stock. During the deferral period, the stock is not fully transferable or exercisable. Okay? So in this type of stock, it's often used in executive compensation plans as a way to the long-term commitment and performance. Okay? So once ang deferral conditions ay na-met, okay, the stock is usually distributed to the recipient. Okay? Now, let's proceed to the bond. So, pag sinabi naman nating bonds, making a loan to a corporation. When an investor buys a bond, they are essentially lending money to a corporation, government, or other entities. In return, for this loan, the issuer of the bond agrees to pay periodic interest, known as the coupon, to the bondholder. The principal amount or face value is returned to the bondholder at the bond's maturity. So, ito pong bonds are ang ginagawang instrument or the debt instrument that serve as a way for companies and government to raise the capital. Okay? So, in return, the investor receive fixed interest payment for the duration of the bond's life, no? And in return of the principal amount when the bond matures. Okay? So, dito naman po, meron tayong 4 types. So, ano-ano po yung types ng bond? So, first, we have what we call the government bonds. So, ito po yung debt securities issued by a government to raise capital. These bonds are considered relatively low-risk investment because they are backed by the government's ability to tax and, if necessary, print more money to meet its debt obligations. So there are different types of government bonds based on their maturity period. Under that, we have the bills. Government bills are short-term securities with maturities typically ranging from a few days to 1 year. They are sold at a discount to their face value, and the difference between the purchase price and the face value represents the investor's interest. Okay, also, we have here the notes. Government notes have medium-term maturities, typically ranging from 2 to 10 years. They pay periodic interest to bondholders. And under the government bond, last is the bond. Government bonds have longer term maturities, often exceeding 10 years. Like notes, they pay periodic interest to bondholders. Okay? The second type is the municipal bonds or the munis. Are debt securities issued by state or local government as well as various governmental entities such as cities, counties, school district, and public agencies. So the very purpose of issuing the municipal bond is to raise fund for public infrastructure projects, okay, like the schools and other community-related initiatives. All right? So here, interest income from the municipal bond is often exempt from federal income tax, no? And making them attractive to certain investors. The third one is the corporate bonds, debt securities issued by companies to raise capital for various purposes such as expansion, acquisitions, or debt refinancing. Okay, so here naman, the investors who purchase corporate bonds essentially lend money to the issuing company in exchange for periodic interest payment and in return of the principal amount at maturity. Okay? And then for the third one, we have the last one, zero coupon bonds are debt securities that do not make periodic interest payment like traditional bonds. Instead, they are issued at a discount to their face value and mature at face value. Okay, so here the investor received the return on investment in the form of the difference between the purchase price and the face value of the bond. Okay, so the term zero coupon comes from the fact that there are no coupon payments during the life of the bond. Okay, so these are the terms and or the concepts that we need to consider in solving or in calculating the uh, different situation, no? Solving different real life situation involving the stocks and bonds. Okay? So that's all. Thank you for watching and don't forget to like and subscribe.